And hello again, welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family or business can benefit from current events. Most of all, thank you for joining me. Within every market there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. Just remember that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are no operators standing by. I am it. While I do have a great team when it comes to developing a financing plan or plan to save you money, I personally work with you. Even if you don't have any needs today, save this number in your phone for future reference. 800-306-1990, 800-306-1990. Celebrating today, got a couple of them here. National Girl Scout Leaders Day, National Jelly Bean Day. I guess that goes for being right after Easter. National Earth Day. I love listening to some of the news broadcasts about National Earth Day. I saw this story this morning. I had to share this with you. So the state of confusion, no longer allowing straws at sit-down restaurants. And within a short period of time, there's going to be no straws allowed at other restaurants as well. Because the average American uses 2 straws a day. That gives us about 500 million straws every day. Starbucks says by the year 2020, they're going to have no straws at all. But they still have those plastic glasses. How does that work? So you can have the plastic glass, you cannot have the straw to drink from it. I'm kind of curious where they're going to be heading with that whole mess. I'm just throwing that out there. Love to figure that out. Maybe Starbucks can share that. Maybe someone will ask their CEO on his way to his next town, or their former CEO, I guess he's still a big shareholder, on his way to his next town hall meeting, how they plan on doing that and what their program will be. I'm just curious. We'll find out. That's just my personal opinion, my personal observation. Moving right along, let's look at the markets today. What are the markets doing? Dow Jones Industrial Average down 25 points. Oil, that is up $1.82 a barrel. Now, we know why oil is up $1.82 a barrel. That has direct reaction or direct response because Secretary of State Mike Pompeo came out today and said no more oil from Iran. Anybody that decides they want to get oil from Iran, they might as well just say they do not want to do business with the United States of America. Do you think they want to buy Iranian oil, or do you think they want to sell or participate in the U.S. economy? Pretty simple answer to that one right there. But what does that affect on gas prices? You'd think that they had already announced this some time ago. National average of a gallon of gasoline, $2.84.2. Taxifornia, $4.03 is the average in Taxifornia. $3.59 in Hawaii. I like watching that one just because we're always so much higher than Hawaii, yet they produce no oil. And then there is the state of confusion where we do produce oil. Alabama, they are leading the country. $2.50 per gallon of gasoline is the average in Alabama. Looking at the 10-year Treasury, up a little bit. Not enough to really worry about, but it is up just a little bit, 2 basis points. We'll look in the mortgage minute to see what is happening with the mortgage-backed securities, because that is the important number that we're constantly looking at. What is happening with mortgage-backed securities? They are up. That means interest rates are down. Interest rates should be going down based on mortgage-backed security price increasing. We've been talking about that for some time. Get yourself in the game. Get ready to take action on your mortgages. If you have not already looked at that, maybe you want to take an idea or take action on how do you get the debt consolidation loan. We've talked about that one in the past as well. how are we dealing with all of those issues? But the mortgage-backed securities, again, down, interest rates are up. Just a shade. We'll see how that continues to play out. Looking in the morning briefing, what do we have going on in the morning briefing? I see the president. The president is active again. I shouldn't say that. It's probably not the president. He's got to have that wall between him and the Trump organization. But the Trump organization now filing a lawsuit against the United States House of Representatives, some committee chairman Elijah Cummings, who's out there as part of the witch hunt in Washington. I wonder what he's going to feel like he being the one going under the deposition. You think he'll enjoy that? Just throwing that out there. Elijah Cummings being sued, the House Oversight Committee being sued by the Trump administration. They want to block the harassment subpoena of his financial records. They're going to have to go before a court and tell the court exactly what they're looking for, why they're looking for it, what their objective is. Hopefully they will get this in a court that is an objective court instead of one that is like the 9th District's Court of Appeals or something along those lines. Unbelievable. Fascinating watching that. A Clinton spokesman says that William Barr lied about the Mueller report. It's not principled. Fascinating watching that one. We'll see what happens there as well. Amazing what's going on there. That is just amazing to me how that continues to happen. Fascinating, Mitchell. Thank you. I don't know. Interesting. Thanks for pointing that out, guys. I don't know. I'm gonna have to see what is going on with our audio. Apparently, the audio is not coming through on the Facebook on our. See, Mitchell, what happens when you're not here? We're not getting any audio going through to the Facebook Live. Now, how's that one coming through? Fascinating that we're getting it through to the rest of the broadcast, but doesn't seem to be going through on the live stream. So we're going to have to check that out, guys, see what is happening here. Not coming back in, huh? Well, we're going to continue to play with that. Let me take a look at that as I continue our conversation. No audio. Ooh. Let me get a commercial going here for the rest of the network, and then we will come right back and see if we can find out what's going on our audio signal.
Benefit from it and it hurts you. The Fair Credit Report Act of 1971 requires banks and credit bureaus to report only accurate information, and nearly 100% of all credit reports are inaccurate. If you're sick and tired of being broke and tired of being robbed by the banks, you owe it to yourself and to your family to call Rondi. Rondi is a FICO-certified credit professional and has helped thousands of people just like you get out of debt and establish great credit. Rondi's number is 855-608-1990. Again, that's 855-608-1990. Or visit creditsanitizer.com. Again, that website is creditsanitizer.com.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694452.
Are you a veteran, police officer, firefighter, doctor, nurse, or teacher? If so, you qualify as one of Ron Siegel's VIP heroes, and we have rewards up to $5,000 or $10,000 when you buy, sell, or refinance a home with one of the Ron Siegel radio partners. As one of the heroes, real estate agents will rebate part of their commission, lending partners will give a credit at closing, the title company has special published rates, and many other service providers have incentives too. All you need to do is call Ron Siegel Radio at 1-800-306-1990. That's 1-800-306-1990. Or visit VIPHeroProgram.com. Just think about what you will do with all the rebates and incentives from the partners of Ron Siegel Radio. Just call us at 800-306-1990 so we can show you our appreciation for your service.
Siegel Lending Team offers you
Are
buying
you earning
power.
a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Did you know that banks and credit bureaus are rewarded financially if you have bad credit? And the worse your credit score is, the more money they can make off of you? How does that make you feel, knowing that banks are getting rich off of your hard-earned money? How does it make you feel, knowing that if a bank or a credit bureau makes a mistake on your credit report, they benefit from it and it hurts you? The Fair Credit Report Act of 1971 requires banks and credit bureaus to report only accurate information, and nearly 100% of all credit reports are inaccurate. If you're sick and tired of being broke and tired of being robbed by the banks, you owe it to yourself and to your family to call Rondi. Rondi is a FICO-certified credit professional and has helped thousands of people just like you get out of debt and establish great credit. Rondi's number is 855-608-1990. Again, that's 855-608-1990. Or visit creditsanitizer.com. Again, that website is creditsanitizer.com.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694452.
Are you a veteran, police officer, firefighter, doctor, nurse, or teacher? If so, you qualify as one of Ron Siegel's VIP heroes, and we have rewards up to $5,000 or $10,000 when you buy, sell, or refinance a home with one of the Ron Siegel radio partners. As one of the heroes, real estate agents will rebate part of their commission, lending partners will give a credit at closing, the title company has special published rates, and many other service providers have incentives too. All you need to do is call Ron Siegel Radio at 1-800-306-1990. That's 1-800-306-1990. Or visit VIPHeroProgram.com. Just think about what you will do with all the rebates and incentives from the partners of Ron Siegel Radio. Just call us at 800-306-1990 so we can show you our appreciation for your service.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Mortgage Minute being brought to you by our friends at Gold Star Mortgage. When you're ready for that next mortgage, Gold Star has the programs. They've got the products for you. We just need you to get on the application, check it out, make sure that we are getting you the information you need. Maybe you need to look at a debt consolidation loan. Right now would probably be a good time to look at that. But let's check and see what's going on in the markets for you. We do that every day on Ron Siegel Radio. The Dow Jones Industrial Average, that is where we start our discussion. That is down 28 points as we speak. The NASDAQ up 271. S&P 500 up just a little bit, 0.48. The 10-year Treasuries, their yield is at 2.59, up a little bit. The mortgage-backed securities down 11 basis points, meaning interest rates are up. The question becomes, though, why is this happening? Anybody can tell you what is happening, but interest rates are up a little bit. Relatively quiet news day, quiet news week, but we're going to get some important housing data. The highlights of the week will be existing home sales, the FHFA House Price Index, and new home sales. Additionally, the first look at 2019 Q1 GDP will be released on Friday. The schedule for the week again, Tuesday, FHFA house prices, new home sales. Wednesday, mortgage application data. Thursday, durable goods and initial jobless claims. Friday, that GDP number. In housing news, existing home sales fell 4.9% in March. It's a little worse than the 3.8% decline expected. Sales are down 5.4% year over year. The median home price was reported at $259,000. Up 3.8% year over year. Remember, that is a national number. That does not mean your neighborhood. If you want your neighborhoods, just let me know. You can send me an email, ron@ronsiegelradio.com. You can go on our social media channels. Tell me that you just want the data, or if you want your home price information. Anytime a home sells in your neighborhood, just get on our mailer, text NEST, N-E-S-T, to 79564. Put in your home information. We'll send you a text message anytime a home sells in your neighborhood. Lawrence Yun, the National Association of Realtors chief economist, anticipated warning in the numbers for March. It is not surprising to see a retreat after a powerful surge in sales in the prior month. Still, current sales activity is underperforming in relation to the strength in the jobs market. The impact of lower mortgage rates has not yet been fully realized. What we really think happened here is bad weather in the Midwest with the polar vortex flooding, which explains why the Midwest was down the most. Additionally, existing home sales for March likely represents buyers shopping in January, and that was after the big decline in stock prices in December. Investors looking at their statements in January were likely not psychologically in a position where they wanted to purchase a home. Our good friend Peter Bachvar had a very interesting write on this morning on inflation. The Fed has been so obsessed with 2% inflation and are talking about potential cutting rates if inflation on the PCE drops to 1.5%, but the game is rigged. Why? Well, the Fed gets an A+ for creating too much money, but what they don't understand is that it's created too many goods via excess capacity in many different areas that have and are financed by that easy money. So all that monetary easing actually laid the basis for lower goods prices that the Fed has tried to inflate. In last week's industrial production figure, the March capacity utilization was 78.8%, still below the 50-year average of 80% in the 10th year of this economic expansion. Think they realize that? Fed has chosen to focus on the PCE measurement of consumer prices instead of CPI. As stated many times, healthcare is the biggest component of PCE, where much is driven by Medicare and Medicaid reimbursement rates. So we have the Fed making monetary policy based on an inflation metric whose biggest component is price fixed by the government. Think about that. Think that is a superficial analysis? The CPI measures actual out-of-pocket medical spending. Core CPI has been 2% for 13 straight months through March. Through January, core PCE has seen one print above 2% since 2012. Thus, we have monetary policy being driven by a cherry-picked measure of consumer price inflation. Why CPI instead of PCE? Third reason, asset price inflation, of course, is not part of any Fed discussion on where too much money ends up, even though their prints are all over the prior to booms and busts. In the search for consistent 2% annual inflation this time around, the world's central banks have blown the bubble of all bubbles in global bonds in the current monetary boom. Bank profitability has suffered as a result, and savers have gotten slammed. Also, if financial conditions matter to monetary policymakers when they are too tight, why is it completely forgotten when they are too loose? The biggest cost of living for most is housing. Anyone catch the mid-2000s home price inflation driven by exceptionally low rates at the time? That's been replaced by rental increases that have run north of 3.5% per annum for years, and home prices that are back to record highs in many markets. That millennial and or first-time home buyer doesn't want to hear about the Fed's whining that inflation is too low and they're not hitting their target. Hedonic adjustments are fooling the Fed and others into thinking inflation is too low. This is how the BLS defines it. In price index mythology, hedonic quality adjustment has come to mean the practice of decomposing an item into its constituent characteristics. I'm quoting here, so don't blame me for all this information. Right? Thus, the BLS is determining whether the utility you get from new technology is more or less than the increase in price of the car. If yes, the price magically declines, and vice versa, even though in real life people pay with actual money. To quantify, Kelly Blue Book said the average vehicle price finished 2018 at $32,544. That is up 14% over the past 5 years. It's up 28% over the past 10 years. According to the BLS measure of CPI, the price of a new car or truck is down by 0.3% since 2013 and up just 11% over the last 11 years. Going back 20 years, the average new vehicle price in real life is higher by about 65%, while the BLS in Fantasyland says it is up only 2%. Yes, the BLS said the average price of a vehicle is up only 2% over the past 20 years, not per year, but in total. This is not reality for the average household consumer budget, but the Fed is basing monetary policy off of it. The high cost of a vehicle has consumers stretching out payments to 7 years. As any consumer of Walmart, Amazon, or anything else, the average U.S. buyer embraces lower prices and deals. After all, Walmart became the biggest private sector employer in the country on a very simple motto: everyday low prices. Would they have made it if prices went up 2% each year? As many goods prices with technology fall every year, what items do Fed members believe should rise by more than 2% to average out a 2% for everything? In 1980, a fully loaded IBM personal computer cost $3,000. If it went up in 2% per annum increase, it would be about $6,400. On March 20th, Jay Powell said low global inflation was, quote, one of the major challenges of our time, unquote. Imagine if a PC cost $6,400. That would be the major challenge of our time. Finally, we share a chart, PCE inflation over the last 30 years. The cost of living has only gone straight up. This is not stability. In conclusion, we discuss these things to try to widen the discussion and thought on inflation and try to make silly the Fed's obsession with an increase of 2% inflation per year, however narrowly they define it, and ignore the assets that they inflate in price and the ends of the earth they've gone to get it. I beg the Fed for some self-introspection and stop their faulty analysis of inflation. While Charlie Evans is worried about Fed's credibility in achieving 2%, the average Walmart shopper could care less and would not be happy being told by him that a 2% annual increase in their cost of living would serve them well. Reality is quite different than what the Fed's econometric models spit out. Fascinating just watching some of this information. You are listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, I'm going to chat a little bit about selling your house, why you need a professional on your team. I talk about that all the time. I am a big believer in getting that professional to help you. So we're going to give you some information about that right now. You can reach me anytime. We'll also talk about some ways you can deal with financial troubles, how to pay off debt, choosing a debt relief service. There's a lot to go over today. We're going to get to all of it. You can reach me anytime, our off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Connect with us, Facebook.com/Ron Siegel Radio, on Twitter @Ron Siegel. Stay tuned. We will be back in just a few.
Siegel Lending Team offers you buying power. Let's say you can afford a monthly mortgage payment, including principal and interest, of around $1,900. With today's rate on a 30-year fixed mortgage of 3.75%, APR 3.85%, that payment could support a $416,000 mortgage. But if you wait and rates tick up to around 6.5%, which is roughly the average home mortgage rate over the past 30 years, that same $1,900 mortgage payment, including principal and interest, may only be able to support a $314,000 mortgage. That's over $100,000 worth of home you're missing out on by waiting. That's buying power. All you need to do to get started is reach out to the Siegel Lending Team at 800-306-1990. That's 800-306-1990. Or visit SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Payment example excludes taxes and insurance. Call us for full details, 800-306-1990. That's 800-306-1990 or SiegelLendingTeam.com. Equal housing lender, licensed under NMLS number 217037.
Are you purchasing or own a luxury home? If you're like so many others, your home is your largest asset and the mortgage is your largest debt. The Siegel Lending Team has some amazing financing opportunities right now. Jumbo loans up to $2 million, 30-year rates below 4%, 15-year rates near 3.5%, and if you can believe it, 7-year interest-only hybrids in low 3s. The Siegel Lending Team has all the options for your jumbo or second home loan requirements. Take advantage of them while you can. To learn more about all the other financing products available from the Siegel Lending Team, call 1-800-306-1990. That's 1-800-306-1990. Or visit SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Again, call 1-800-306-1990. Rates subject to change without notice. Licensed by NMLS ID 217037 and 145502. Equal housing lender.
Homeowners that are 62 and older are about to find out a great way to live a better retirement. It's called a reverse mortgage, and SLT can help you learn more. Call the Siegel Lending Team at 800-306-1990 right now to receive your free booklet with no obligation. It answers questions like how a reverse mortgage works, how much you qualify for, the ways to receive your money, and more. When you call the experts at Siegel Lending Team today, you'll learn the benefits of a government-insured reverse mortgage, how it will eliminate your monthly mortgage payments, and give you tax-free cash from the equity in your home. Here's the best part. You still own your home. Now is the best time to take control of your retirement. Call 800-306-1990. That's 800-306-1990 to get your free brochure. Call today or visit our website at SiegelLendingTeam.com. That's SIEGEL LendingTeam.com, or simply call 800-306-1990.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. In the real-time real estate segment today, being brought to you by the area trusted real estate professionals of Ron Siegel Radio, text NEST, N-E-S-T, to 79564. Find your dream home before someone else does. Selling your house, here's why you need a pro in your corner. With home prices on the rise and buyer demand still strong, some sellers may be tempted to try to sell their homes on their own rather than using the services of a real estate professional. Real estate agents are trained and experienced in negotiation, while in most cases the seller is not. Sellers must realize that their ability to negotiate will determine whether or not they get the best deal for themselves and their families. I'm going to give you a list of just some of the people with whom the seller must be prepared to negotiate if they decide to try and sell on their own. So the buyer who wants the best deal possible, they've got to negotiate with them. The buyer's agent, who solely represents the best interests of the buyer. The buyer's attorney, if they're in that area of the country. They might even be dealing in California with the buyer choosing the escrow company. If you do not have any representation, you may not know one. Home inspection companies, which work for the buyer and will almost always find some problems with the house. Termite company, if there are challenges. The buyer's lender, if the structure of the mortgage requires seller's participation. The appraiser, if there is a question of value. The title company, if there are challenges with certificates of occupancy or other permits or other title-related issues. Town or municipality, if you need to get the certificate of occupancy permits mentioned above. The buyer's buyer, in case there are challenges with the house your buyer is selling. Think about that one. The percentage of sellers who have hired real estate agents to sell their homes has increased steadily over the past 20 years. Even though we've got tons of information on the internet, think about that. The percentage of sellers who have hired a real estate agent to sell their homes has increased steadily over the last 20 years. If you have some questions about this, again, I've told you this before, I have a real estate license. I do not use it for anything other than my own purposes, but I'm not qualified to transact real estate business. I've shared that before, and I still hire a real estate professional to help myself and my family. Why do you think? I talk about this every day. I've been doing it for years, right? I've been doing the radio show. It's almost 10 years now. And before that, I was involved in real estate in my own portfolio, buying, selling, lending for 20-some years. I don't believe that I can handle, or I'm not qualified, I'm not my best advocate to deal with the purchase of or sale of real estate. Do you think you are? Do you have that experience? Do you think you need somebody to help you with some of these things? The laws in the real estate world change every year at least. Maybe it's more than once a year. The great real estate professionals must go and get educated on a regular basis to find out what is going on, what has changed. If you're not doing at least that, are you not putting your own family at a disadvantage? Is that what you want to do when you're talking about the largest purchase or the largest transaction in your life? Just saying that. That's the Real-Time Real Estate segment, again brought to you by the area trusted real estate professionals of Ron Siegel Radio. Text NEST, N-E-S-T, 79564. They've got a lot of great information on there. Better than most places, I'm going to suggest to you. They're the quickest one that I know of to get you information that you need to make a business decision. I've looked at some of the big names out there, and we've tested some of the big names. And it's amazing how Nest gets the information to us quicker than those big names ever get out. So just throwing that out there for your consideration. Again, that's the Real-Time Real Estate segment brought to you by the area trusted real estate professionals of Ron Siegel Radio. How do you start building credit once you turn 18? It may even be once you decide that you want to build credit. Good credit is crucial to unlocking many financial opportunities in life. When you have a great credit score, you will see lower interest rates on car loans, credit cards, and mortgages. Some employers and landlords even check credit reports before they make a job offer or approve a resident application. Building good credit takes time, and adults as young as 18 should consider starting immediately so they have plenty of time to build up their credit score. Here's how to start building credit once you turn 18. Number one, understand the basics of credit. As you start to build credit, you should understand the basics of how it works. Your credit report, maintained by credit bureaus Experian, TransUnion, and Equifax, contains data on your current and past debts, payment history, residential history, and more. This data is supplied by many of the lenders, creditors, and businesses with which you hold accounts. The information contained in your credit report determines your credit score. Higher credit scores are more attractive to lenders and creditors. The factors that influence your credit score: payment history, average age of accounts, credit utilization ratio, account mix, new credit. As a new adult, some of these factors may not currently apply to you. However, they can all negatively or positively affect your score, depending on your behavior as a consumer. Educating yourself on credit now will help you avoid costly mistakes in the future. Number two, Become an authorized user. If you have a friend or family member who is willing to add you as an authorized user on their credit card, you can piggyback off their credit card activity to build your credit. Even if you don't use the card, the account can still land on your credit report and boost your credit score. This method poses some risks both to the primary card holder and the authorized user. If you are the primary card holder, rack up too much debt or miss payments, that activity could end up damaging the credit of both parties. You should also verify that the credit card company reports card activity for authorized users. If they don't, your credit won't see any benefit. Get a starter credit card. That is a big issue. Credit cards are one of the best tools around for building credit. But you may have trouble qualifying for one when you have no credit history. Luckily, there are a few credit card options for young people with little or no credit history. Unsecured cards, well, if you don't have the money to make a security deposit, consider an unsecured credit card like Avant Credit Card. This card offers a process that presents you with a credit line based on your credit worthiness before you apply. It also has no penalty or hidden fees, a perfect fit for any young adult starter credit. Cards that don't check your credit history, like newer Pedal Visa credit card. It's a true unsecured card that doesn't require a credit history to approve you. Instead, it looks at your income and financial habits to determine eligibility. It does not require a security deposit like a secured card. It grants credit limits from $500 to $10,000, charges no fees, no annual fee, no late fee, international fee, or any fee. Secured credit cards. Secured credit cards require an upfront security deposit to open. Your deposit will typically equal your initial credit limit. For example, a $500 security deposit would get you a $500 credit limit. These cards are easier to qualify for, but you can use them to make purchases and build credit just like traditional cards, student credit cards. If you're currently enrolled in school, you can apply for a student credit card. These cards typically have low credit limits, but they will help you build credit. And they may even offer extra incentives for earning good grades. Just a few of them there for you. Making payments on time. Making timely payments is the most important thing you can do to build credit, as payment history makes up 35% of your credit score. Positive payment history will help your credit score immensely. This advice applies to credit cards, loans, utilities like cell phone services, and any other account that requires a monthly payment. No matter the account type, a late or missed payment that ends on your credit report can do significant damage to your credit score. Number 5, maintain a low credit card balance. Your credit utilization ratio, or the amount of available credit you have tied up in debt, is another major contributor to your credit score. Most experts recommend keeping your credit card balances below 30% of the available credit limit. Ideally, you should pay off your balance in full each month to avoid interest and get your utilization low. Remember, pay it off before the statement closing date, not after you get your bill. If you pay it off after you get your bill, you are not going to get the full benefit. Pay it off before. Get a loan. Getting a loan just to build credit is generally not a good idea, as you should not take on debt only for the sake of your credit score. But if you have a valid reason, such as needing a car for college, a small loan in your name can help build your credit. Just like credit cards, loans will only build credit if you pay them on time every month. And if you also have a credit card, getting a loan will help with the account mix factor of your credit score. Number 7, monitor your credit report and credit scores. Now that you're building credit, you should monitor your credit report and credit score. Monitoring your credit is one of the best ways to learn what will positively or negatively impact your scores. It will also help you catch inaccuracies or signs of identity theft sooner. You can check your credit report for free annually with each major credit bureau. As you review your report, look for any negative or inaccurate information that could be messing up your credit. Keep it simple for now is the next step. The more credit cards and loans you open, the higher chances you have of falling into debt. When you're just starting out, you should probably play it safe and manage one basic credit card and or small loan until you get the hang of things. Trying to manage too many debts at once could get you in over your head. Over time, you can start to add other credit cards or loans into the mix, diversifying your credit profile and adding more opportunities to build credit. And because the age of your accounts affects your credit score, just keeping accounts open will help build credit in the long run. That is why we have some ideas for that newbie, the new person that gets into getting something on credit. Just throwing that out there for you. You are listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. When we come back, we will be chatting a little bit about ways you can deal with financial troubles, how to pay off your oppressive credit card debt, ways to improve your credit scores, choosing a debt relief company. We'll throw that in there. Got a lot still to cover for you. You can reach me anytime. Our off-air number, 800-306-1990. 800-306-1990 or ronsiegelradio.com. Connect with us, facebook.com/Ron Siegel Radio. On Twitter, @Ron Siegel. Stay tuned. We'll be back in just a few.
Are you living in the home of your dreams or simply where you think you can afford? Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Most businesses struggle to get the online reviews they need to get a competitive edge over their competition. Rex is a brand new technology that uses text messages to direct happy clients to your online review sites, Zillow, Google, Facebook, and Yelp, and unhappy clients to a private survey, so businesses can win more customers. Try Rex today by going to www.meetrex.com.
Are you currently renting a home? Do you like paying someone else's mortgage payment? Why not explore the options to purchase your own home? Can you imagine a 30-year fixed-rate loan below 4.25% APR? This means with $10,500, you can purchase a $295,000 home and have a principal and interest payment of about $1,400 per month. What are you paying in rent? Does your family deserve the opportunity to take advantage of the current market? To learn more about these exciting opportunities, the Siegel Lending Team is standing by to speak with you. Call now, 1-800-306-1990. That's 1-800-306-1990. Or visit SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Or 1-800-306-1990. Rate subject to change without notice. Licensed by NMLS ID 217037 and 145502. Equal housing lender. Not endorsed or sponsored by any government agency.
Do you have a goal of mortgage-free home ownership? What if your home was valued at $500,000? Are you aware that a free and clear home could be costing you $2,500 every month, $30,000 per year? The mortgage planners at the Siegel Lending Team would like to show you how you can own your home, generate tax-free income, and accumulate family wealth. You simply need to call the Ron Siegel Team at 1-800-306-1990. That is 1-800-306-1990. By sending the team a copy of your most recent mortgage statement, the team will send you a no-obligation real estate plan. You be the judge if this is right for your family. Again, all you have to do is send the team a copy of your mortgage statement by email to reap@ronsiegelradio.com or call today. Ron Siegel, 1-800-306-1990. That is 1-800-306-1990.
Rate subject to change and without notice. Licensed by the California DOC and BRE NMLS 217037 and 145502 and Cal BRE 0186945 and 1866775.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990. 800-306-1990. In the Word on Wealth segment today, being brought to you by AskAboutReverseMortgages.com. You have a home, got to have a home. You can't get a reverse mortgage without a home. Are you 62 years of age or older? Do you have some equity in your property? Well, the reverse mortgage might be the right solution for you. I think for most people it is the right solution. The biggest question just becomes, are you going to get yourself educated on the program, Or are you going to stick with what somebody else might tell you about it? And in most instances, that which we don't know about, we don't like. I've talked about that many, many times. If we don't know about it, we say, hey, you know something, I don't like that idea. Well, why don't we ever find out about it? Why don't we get the answer to the problem or the question, do a little bit of homework on it, and figure out if it makes sense for us or not? What are target date funds? Here's another one. A lot of people don't have any idea what a target date fund is. Easiest way to start saving for retirement. Do you feel like investing is too complicated to understand sometimes? Target date funds are one way to take the confusion out of investing and put the power back in your hands so you can have a financially secure retirement. So we're going to take a look at what target date funds are and why some people might want to use them. We'll also explain how you figure out your optimal retirement date and walk you through how to open a target date fund. So here's what you need to know about target date retirement funds. Confused about target date funds? Don't be. Target date funds are specifically designed to be an investment product that makes investing super easy. If the alphabet soup, 401ks, IRAs, 403bs is too much for you, just keep it simple. With target date funds, you don't have to do a thing other than invest your money. It's the ultimate in set it and forget it investing, and could be the best and easiest investment choice you ever make. What is a target date fund? It's a retirement fund, simple investment portfolio that's simply made up of stocks and bonds in a specific ratio that changes with your age. All target date funds are identified with a specific year in their name. They're typically divided into 5-year increments, 2040, 2045, 2050. And they're available for investors to buy with a retirement date in mind that's as close as 5 years down the road to as far as 40 years down the road at any given time. Understanding what's in a target date fund, it's widely accepted that the younger you are, the more risk you can afford to take with your money in order to maximize long-term returns. Putting your money in the stock market, which is volatile by its very nature, is an ideal way to accomplish this. So target date funds initially put your money heavily into the stock market in your early years. But the closer you get to retirement, the more you should be thinking about preserving your capital rather than aggressively growing it. Bonds are an ideal way to accomplish this. They generally offer lower returns than stocks, but do not have the crazy ups and downs commonly associated with the stock market. As you age, the fund manager of your target date fund will automatically add more bonds to your investment portfolio while simultaneously reducing the amount of stocks you own. While you're probably familiar with the idea of the stock market, you may not be as familiar with the bond market, so let's take a moment to explain that. Bonds are where you're kind of like the bank lending somebody money. When you buy savings bonds, you lend money to the federal government. With corporate bonds, you lend money to companies. And when you buy municipal bonds, you're lending money to cities, counties, and states. Again, the beauty of a target retirement fund is that it does not involve any mess or fuss on your part. When you open a target date fund, the fund's manager allocates your money. You do not have to know anything about the ideal stocks to bonds ratio for your age. It's all done for you. However, I want to emphasize this point. You'll never be completely out of stocks with a target date fund. Why not? Because you never want to outlive your money. You always need to at least some exposure to higher risks and rewards of the stock market. You want 100% into bonds as you approached retirement. Your money wouldn't really grow and it would eventually get eaten up by inflation. That's a sure recipe for a lean retirement and possibly being broke during your golden years. So how do I figure out my target retirement date is the next question. Well, determining the target part you want for your target date fund is easy. It all starts with asking yourself a couple of questions. What do you want out of life? When do you want to be able to stop working? Sure, there are a lot of retirement calculators out there, including one from Vanguard that can help you get some insights on these questions, but nobody knows the right answer other than you. If we play around with some real world numbers to drive the point home, say you expect to retire at age 70 and you're 40 years old now, just subtract your current age from 70 to figure out what target fund you'd want. In this example, you might want to buy a target fund for 30 years in the future, such as the 2050 target date fund. If you want to retire as soon as 15 years, you might buy a 2035 target date fund instead. There's a lot of places you can open them. I'm not going to give you any recommendations on these different sites. I'm just going to tell you that there are a lot of them out there. You want to look at what the expense ratios are, what the minimum investment is, what years they have available. Do they have the right ones available? What's their track record? Final thought, too often investing can seem so complicated that you risk shutting down and not doing anything to prepare for your retirement. You might panic and feel the need to hire someone to guide you. A target date fund is the antidote to that kind of mental muddle. It's the ultimate in set it and forget it investing. That is the Word on Wealth segment, again brought to you by our friends over at askaboutreversemortgages.com. I recommend all the time with askaboutreversemortgage.com chatting with our friend Jay Kaplan. He has a lot of answers to the common questions about the reverse mortgage product. And there's been a lot of changes. I can go over a lot of them with you, but Jay and I partner on a lot of these things so that he can really take it over from there and do all the legwork on it. He is the guru. Again, that is the Word on Wealth segment, brought to you by askaboutreversemortgages.com. So we've been chatting a bit about credit, understanding credit. What if you get in trouble with credit? That would be a thought. How do you pay off your oppressive credit card debt is a question that we will address right now. Credit card debt can weigh heavily on your shoulders and wallet. If you're tired of the anxious feelings and precarious payments, you'll need to learn how to quickly pay off credit card debt. While there are a few instant fixes outside of major windfall, there are plenty of steps you can take to minimize the damage credit card debt can cause and ultimately get rid of it. After all, a gradual journey to success is still a journey to success. These tips can help you go from drowning in debt to living debt-free. When faced with a daunting credit card balance, some might be tempted to just make minimum payments or ignore the debt altogether. There can be dire consequences with this strategy. For starters, credit card interest quickly adds up. Most credit card issuers require a minimum payment of 1 to 2% of your balance. Let's assume, for example, you owe $6,000 on a credit card with a 15% annual percentage rate, and your issuer requires 2% of that balance as a minimum payment. You'd wind up paying close to around $9,100 in interest were you to only make that $120 minimum for the full 355 months, nearly 30 years. Think about that. It would take to pay that $6,000 balance. Plus, mega interest aside, those credit card balances might be dragging down your credit score too. Payment history and amounts owed are two major factors used to calculate your credit score, so getting on top of them as soon as possible is a smart choice. Choose to be money smart and control the debt before it controls you. Here's some strategies. Number one, go in with a plan. A strong strategy usually starts with taking stock of the situation. Start by rounding up all your credit cards. For each credit card, track the amount of debt, the limit, interest rates, minimum monthly payments, and other crucial information. This will help you form a clearer understanding of your debt status. Doing so will also show which cards are weighing you down the most. While this can be overwhelming, it will help you create a concrete plan to move forward. Credit card consolidation is one such plan you may want to consider. If you have several credit cards, then you find yourself making several payments each month for all of these cards. Each credit card will also come with its own balance and interest rate that may be different from the others. Sometimes when the credit card debt is stacked too high, consumers will choose to consolidate this debt into one manageable monthly payment, meaning the balances on all credit cards combined will be lumped into one balance you will pay each month rather than several. Consolidating credit card debt may be a viable way to simplify the process and may even help lower and manage interest rates more effectively than if you continue to pay each credit card separately every month. Tackle the smallest balance first. It might be tempting to tackle the biggest balance right off the bat, but small victories are a great motivation if you have multiple cards with various balances. Tackling the smallest balance might be the way to go. Take the account with the smallest balance. Try to pay double or triple monthly payments, whatever you can afford. Do so while continuing to make the minimum payment on your other cards. Neglecting the other cards entirely can lead to major negative consequences. Once the smallest balance is knocked down to zero, tackle the card with the next lowest balance. This payoff strategy gives you the satisfaction of seeing a card balance flip to zero early in your payoff plan. Hopefully this feeling will help you keep motivated to battle each card's debt as you pay off charges. Pay down the card with the highest interest rate. Finance charges on your credit cards can quickly eat away at your funds. To keep your debts from growing, you may instead want to focus on paying off the credit card with the highest interest rate first. Consider a balance transfer card. Many credit card issuers offer 0% introductory APRs to customers who transfer a balance over to their card from another. That 0% APR will expire eventually, usually 12 to 15 months, though some of the better balance transfer credit cards can last as long as 18 to 21 months. Also keep in mind that most offers involve an account balance transfer fee, which is usually 2 to 5% of the balance. Might be an option for you. Look into a personal loan is another choice. Take a look at what your expenses are, and you might even want to look at what are some of the other ways you might be able to earn additional income. Just a few thoughts for you right there on how to pay off that credit. Just a thought for you. And as always, I ask, set that first radio preset button to come back here every day to join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to John, who's engineering us today. And, of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.